Hi there, traders. This is Brad Gilbert with today's trading action. All right, now with Canadian and UK holidays, it was a pretty quiet start to the week, and but that doesn't stop the market sort of reshaping itself. And since the non-farm payrolls, right, we did see the US dollar take a bit of a nosedive, right? And there was a bit of talk in the media. If you look at the dollar pairs at the top, obviously euro coming back, sterling, Aussie a little bit, and same with Kiwi. Now the media were talking about the markets sort of factoring in rate cuts for the US, right? And that was sort of like yesterday. I had a good look around, and there wasn't much happening. But if I just come over here and give you a look at follow the trail sort of template, the US Treasury yields have come off significantly, right? So what that means is there should be dollar weakness in the market, right? And the equity markets have had a stellar day yesterday, right? So that makes sense. That is a match, right? Yields lower, equities up. Now we've got a situation where euro, sterling, Aussie, Kiwi are starting to rally, right? And the dollar is starting to fall, but it's only just starting, right? It's almost like the yields have moved, but the currencies haven't yet, or the rest of the markets. And I think this is where we might start to see some really good opportunities because at the moment, you look at the charts and you're like, well, okay, there's a lot of trend lines here that I need to redraw and sort of get tuned up. But you look at, say, euro, sterling, and Aussie, it doesn't look like there's much going on, even the Kiwi, right? But this is the subtle move where these things start. If I come back over here to the live trade signals, we're starting to see a lot of the major pairs line up, right? Short term and long term alerts, they are looking pretty good. Now, so today, with that UK and Canadian holiday, it's more like Tuesday's Monday, right? So there's not still a lot of activity, but I tell you what, this is something that we've got to be getting ready to sort of jump on, right? Because if those US yields do fall, the dollar will fall, right? And it's almost like we've got a little bit of a head start here on the whole move itself. So I'm sort of looking across mainly the dollar Swiss. I've always liked dollar Swiss. Last Friday, I was mentioning dollar Swiss and euro as the best two pairs to trade on weaker US numbers, and it looks like out of those they did outperform. Dollar yen, the beast, is back in play too. It's heading south. So these ones here, right? They are sitting there. Looks like there's nothing going on. What I'm saying is, I think we could start to see the start of a move, right? And if you look at the daily charts, right, there's like been a really good clean out, and this is disappointing for big fund managers because if they would be sitting there long, they get stopped out on euro, same with sterling, and then all of a sudden the market comes back. Good for us as a speculator, not good for those fund managers holding long term positions who are just getting sort of bashed up a little bit. So what do I think? Well, let's just keep a close eye on things, how they develop over the course of the day. It is a little bit of a shame that we don't have some decent economic numbers coming out. Like you got the balance of trade numbers, maybe for Canada because oil is such a big thing, that could come into play. ISM services PMI, otherwise known as the non-manufacturing PMI, that's worth a look at as well. But it's one of those weeks where we're just going to have things sort of rolling out second tier, third tier numbers. It's not going to be super aggressive. And that's where a move like this, that's where you see a subtle shift in one part of the market, in this case, the US bond market, where the yields are lower, right? You're going to see equities go up, and we're going to start to see euro, sterling, Aussie, Kiwi go up, and the dollar pairs go down, right? That's the play I'm looking for. Now, I've got the signals. I'm always conscious of the fact when we do have public holidays and the market does get a little bit fractured, right? That's something that we need to look at. Today, just as a bit of a reminder, I will also be running finding the key market driver. This is what I'm talking about. This is quite relevant for what's happening right now. What is driving the markets? At the moment, right, we had the non-farm payrolls, which were sort of driving the market. Now we've got a situation where that's in there and we're seeing a rebalance. Bonds, equity markets are going up again, and the dollar, well, it should start going down, right? So that's what we're looking for. And we'll see how that plays out over the course of, the next 12, 24 hours. So just keep an eye on that. And as you can see, like when the markets do calm down, the live signals, it's Like you just can't get enough. It's not like a Christmas tree lighting up. You got opportunities everywhere. Be patient. Wait for the right one. Make sure you have a look around too to confirm the actual signal is on, right? Excuse me. I said that yesterday, this week, with the shape of the data, economic numbers this week, it's one of those weeks where everything looks really good. I mean, there's a lot of red numbers here coming out of China. Yeah, trade numbers for them are important because they're so epically massive, right? 114 billion, all that sort of stuff. But outside of that, you've got the Bank of England. We know they're going to cut rates. So that's going to get a little bit tricky with them. Um, let's just see how it rolls out. But I think we've got the advantage at the moment because we can see what the dollar's doing and where it's going. Okay. And I can't see any US numbers to turn the dollar move around just at the moment. All right, guys, have a good one. I may see you in the live session today, finding the key market driver. I'll be going over again how we can actually find out what's driving the markets. And then once we do know that, we know exactly what to look for. All right, guys, have a good one. All the best. Cheerio.